What's up, everybody? This is Jimmy with Trading Decoded, and when I woke up this morning, I asked my Discord members what they would like me to make a video about. So I'll lead in with the question that was asked of me to make the video on, and then I will get into some points that matter. The question was, can you show me some examples and thought processes for entry points after a big move? I am going to answer that question, but I'm not going to limit it to just a big move, but to moves in general so that you guys can start to see things how I see them. There's some important things that I need to speak to you guys about first. The first one is understanding how I used to trade and then versus how I trade now. So I used to trade SPY with large positions and very quick moves. And it worked out great when SPY was a bit more predictable than it is now. I would scalp with large positions. However, it's very stressful. It can get away from you very quickly, and it's risky, especially now with the way SPY is. So what's changed? Well, SPY changed. And as a result, that had forced me into wanting to change how I was trading for a couple of reasons. Number one, to minimize my risk. Number two, to take away some stress and emotion. And number three, because ultimately, I want to be able to trade for a living. I want to be in and out of the market, by 11 o'clock in the morning and be about my business. So I had to change things in order to make that happen. So the way I trade now, and again, this was sparked by the way SPY now reacts versus how it did a year ago. I take 10 to 25 contract positions now. But the difference is I'm taking better quality trades. I am being patient about my entries. I am waiting for setups that I like. And then I am holding those trades for longer than I ever did in times past. So on average now, I'm averaging between $3,000 and $5,000 roughly a day on my winning days. Some days I don't trade at all on my big account. And, long and short of it is I'm a lot less stressed and I am done early enough in the day to where when I do this for a living, I can retire and still make good money. So what we first have to look at is defining what risk is and how do we minimize it. Risk is defined as a situation involving exposure to danger. That's the simple version of it, and it holds true to every facet of life, basically, including trading. How do we minimize risk? Well, we have to practice patience. We have to look for patterns. We have to understand support and resistance. And most importantly, we have to learn how to control our emotion. That can come in many forms. If you're coming off a bad day or a streak of bad days, then it's very advantageous for you to take a day or two or three or a week off of trading. What this is going to do is curtail your want to trade back those losses the next trading day, which in and of itself forces you to take more risk because you're in a hurry to make up for recent losses. This will destroy you. It'll destroy your confidence. It'll destroy your emotions, and it'll destroy your account. Not a good idea. This is revenge trading. We can't do that. We could take smaller positions. We can trade only on expiration days. We can trade a little bit farther away from our normal strike price so that the contracts cost less. And then finally, it helps tremendously to have a plan. Plan when you're going to get in a trade and plan to when you're going to exit with profits or losses before you get into that trade. This is how we minimize risk. Once you can learn to do that, then you can start to see charts more clear. But until you can, trade emotionless. Emotion will continue to control your trades and you will continue to stress, struggle, and have a hard time doing this. All this video is not going to be about technicals. I am going to assume you all know how to spot trends, channels, breakouts, support, and resistance. If you don't know how to do these things, then you need to go back to the very, very basics of training and learn how to chart these things or spot them, even if you don't chart them. So what I'm going to do is go bar by bar for a good portion of Friday's trading session so that I can explain to you guys to the best of my ability what I was seeing throughout the day. I always tell people, especially those with smaller accounts, to not play the open. And the reason I tell them not to play the open is because it literally is a 50-50 gamble. Nobody, anywhere, for any reason, will ever tell you with 100% certainty which way SPY is going to go at open. You might get the first candle right. You might get the first candle wrong. Again, it's a 50-50 shot. If you cannot afford to take that risk, then don't do it. It's basically using up a day trade if you're under PDT. It's using up capital that has to settle if you're under PDT on a cash account. And it's going to screw with your emotions. So you need to avoid doing that unless you can afford to do it, which I would say is reserved for those with larger accounts who are above PDT and that can afford to take a loss if and eventually when they are wrong. So don't play the open. Not to mention the fact that the contracts themselves cost more at closer to open anyway because of the volatility spike that happens in the morning. So right off the bat, you're starting behind the 8-ball, unless you happen to get in on the lucky side of the trade and it tears in one direction or the other. Can it be done? Of course. But should you do it, especially on a smaller account? Absolutely not. We're going to replay the day, and we're going to try to attempt to go through what I was seeing, how I was seeing it, the things I was noticing and calling out in our Discord when I would see them, to try and answer the original question. So we'll start with the first candle of the day. Green candle. We're practicing patience because, well, we really have no idea what's going to happen. All right, next candle is up, but red. So as of right this second, we have a current high of day. We need more information before we can determine anything such as a trend, a channel, support or resistance, and a breakout, obviously. So right now, we now have a high of day and a low of day. We still can't determine a trend because we need to verify that we have either a higher high next or a lower high. So let's see what happens. We have a double top. Now, me being a little bit more risky would start to believe that my next play or first play of the day is going to be a put. I would possibly enter here, but for those who are less risky or want to be more sure, which I recommend, I would wait to see what the next candle is. Okay, it's still a lower high, but we still don't know if we're moving up or not. Now, what I am going to do is plot where I took my first put for the day so that you can see what I was thinking, but understand that it is very risky. And that is why I have it listed as yellow, and the red would be my stop loss. If I got in here and it immediately reversed on me, I would get out no farther away than that red line. We have a top and a lower high. So theoretically, we could possibly be starting a downtrend. Does it make it so? But again, I was willing to put on a little bit more risk. That's where I started my opening position. Ooh. All right, that wasn't looking good. We almost hit my stop loss. Big red candle. Now, at this point, after seeing a candle like that, and already assuming that we are possibly trending down, I would be looking for a candle close below the low before I took what I would then consider to be a much safer put position. Let's see if we get it. There it is. So, if you were to buy a put because you waited for the candle close, you would buy at this green line. Okay? I'm going to go ahead and shut off my original trade so that this chart doesn't get cluttered with lines, but I'm trying to point them out as I see them so that you understand what my thought process is. My cut for this put would be the red line. I made it green because it's a safer call put, and still red would be my stop loss, which is at the previous low of day. Let's continue on. Still moving lower. Still moving lower. We put in a new lower high. Well, with that, we possibly might have the stop of the downtrend. Big wick on this red candle symbolizes that buyers were coming in, possibly trying to prevent the fall from continuing. Let's continue. All right. So we almost got stopped out had we candle closed above that, but that is a new lower high. Let's see what the next candle is. All right. Now at this point, I can draw a downward trend line because I have lower highs to go off of. There's my trend. Now, my new exit for any of the puts that I'm in is when we break this trend, if we break the trend. Let's continue down. Big candle close. Down, down, down. Oof. Okay. Now, let's just say you come to the trading table late and you want to get into a put because you show up and you see that we're trending down. Okay, so you're still good if you're in either of these two puts up here. That green candle would start to weigh on me a little bit. And in fact, it did. I didn't close my puts here, but I know that I was going to be closing them soon because that is a massive green candle with a massive wick on the bottom, which means we failed to go lower. This could be as low as we get. We don't know. But I held on to my puts. But let's say you got in right here. I would say this is risky only after seeing this green bar. Prior to that, there was nothing else telling you that this move wasn't going to continue down. So if you had gotten into puts at that point, this green candle, if you didn't have a trend line, probably should have shook you out. If it didn't, let's see what happens. My trend line would be my stop loss no matter what position you take or where you took a put at this point. Still below that trend line, but we made a higher low. This could be the start of reversal. That is where I exited my puts that I bought up here. Didn't wait for the trend to change or break that line. I read the candlesticks before and I anticipated what I thought to be a break of the trend possibly coming soon. And there it is. So, broke the trend. So you would have lost money on this put. That's part of the game. If you were to close when we closed through, it was about a 50-cent move. Would have lost some money. But the risk factor here is small so long as you obey cutting your losses when you break the trend. Too many people will hold through this, hoping that it comes back down. That is not the proper way to do this. Otherwise, you're going to hurt yourself. We need to learn to trade like robots so that it becomes automatic to take our entries when we plan to and get out of them when we plan to and take profits when we plan to. Okay? So even if I had waited for this candle to break, I still would have made good money on my puts, whether I got in up the top at the riskier trade or when I got in at the break of the low. Still, that was a $2 move from here down. It was more than that from up top. So you've got to pay attention to these things, and then we got to move forward, right? So I'm going to go ahead and clear that put out of the way. We can keep the downtrend there. Let's see what happens. So this could be the start of reversal. So we're going to be looking for higher lows. So far, we're getting them. Still getting them. Big green candle. Okay. This is telling me that the buyers are strong, even though the sellers tried to move us down a little bit and failed. We are continuing to move up. Okay. I'm going to drop a trend line in here because we have something to go by. Okay. Now, when we go with a trend like this, we want to be looking for a previous level to break before, at least before I determine that calls are the right call. Because I don't know yet if this is a reversal. Technically, it's not really a reversal. I mean, we're still technically trending down. If this was the last green candle of this run, it very well could be. But we're still lower highs. So on the day, the overall day so far, even though we're early in, it's only 30 minutes in, we are still trending down. So understand that if you get into calls at this point, you are still technically fighting the trend of the day. If you are knowingly going to take quick trades, then you can be micromanaging or looking for these micro reversals or micro moves within the greater part of the day. So if you wanted to play calls and we failed to move lower here, you could theoretically risk buying a call here or be a little more conservative and wait until we break this previous lower high. Okay. And know that it's risky simply because we're fighting the trend of the day so far. But if you got in there, you waited for that candle close, you got in, you're up on this next green candle. Great. Awesome. Let's see what happens. Okay. Now, the question here is, where is even a safer play to get in on a reversal? This here was risky because we haven't verified anything. But my rule, typically, when I play on my smaller account, is when we're coming in with a V, I like to wait till previous humps like this are broken or challenged at least. If you want to play risky, you can anticipate that this move is going to continue and look to get in before the candle close is done. In this case, it ended up working out, but it is much safer to get in at the break of the last time we tried to run up and dropped. Okay, that's why it worked here. We ran up, we dropped, we waited for that break, we got in. Again, here's another point where we tried to run up and dropped. We broke it, we get in. Where am I looking to take profits at that point? Near the last place we rejected and headed back down. In either one of these two trades, you would have made good money being more risky or less risky and much safer. Okay? So where this move right here, if you get in here, 431 to 432, so that's about a 75-cent move. That's a decent chunk of money on a contract. That works out nice. So, as I tell all of my people all the time, sell into momentum. If you try and wait to get the whole move, you are going to chase the close and you're going to give up more money than you would if you sold as we moved towards the target. Okay. I sell into the momentum. So let's see what the next candle brings us. Ooh, still running up. Now, I sold while this candle was printing here. I didn't wait till my target, but this was my zone. This red line was my zone, my profit targets. I took them. I could have held on a little longer and got, a little bit more out of the trade. But the problem is when you're trying to sell at this exact point, trying to get to the high of the move, you're going to miss it, and you're going to miss your fills too to get out. Whereas if you're selling while this thing is running up, then you can easily get out of your position and take some profit. So I'm going to go ahead and get rid of this, this, and this. Now we're back to a clean slate. We know nothing at this point other than this could possibly be a big channel. Okay. We failed to break the high of day. This is a decent resistance zone at this point. We've hit it almost 3-4 times and reversed back down. So again, I'm thinking in my head, all right, last time we got here, we went down a decent amount. I am going to attempt to get into puts again, depending on what the next candle looks like. Next candle, much lower. Okay. I'm going to not assume that it's going to do what it did last time, although plenty of people did and they made good money, but we're still going down. Still going down. Now, we tried to move up here based on this candlestick and the sellers pushed it down. That's a pretty bearish move right there. At this point, I would draw a downtrend line and consider taking a put at any point as long as we continue to move down and don't break that trend. So we're moving down, we're moving down, we're moving down, down, down. Getting close. This is telling me that, hey, buyers are starting to care about this drop. We are near a place where we had support before. I would probably be thinking to get out around this zone. Doesn't mean it won't continue to drop farther. Doesn't mean it won't shoot back up. We don't know. But what I'm not interested in is holding through whatever fight might take place at this area. Clearly, the massive and quick rundown we were having is starting to slow down simply based on this green candle alone. You can't have 5 or 6 red candles and then all of a sudden a green one in there and not question what caused that. But if we respected our trend line, we're still in, we're still holding. We're still holding. Now, I would have left money on the table here if I would have gotten out, but at very least, you should be aware that the possible break of this line is coming. Here we go again. We double bottom, okay? We broke the current low of day. And now another green candle. What happens next? All right. Now you should be thinking to yourself, we might be trading sideways. This might be the bottom of this particular low. It could very well come back down, move back up a little bit, and come back down. Not interested in that. If you got into puts anywhere in here, you're already up a good chunk of money. There's no reason whatsoever to risk giving any of that away, because you're going to hope that the move continues down. It could, but you can't look at it that way. You have to look at it as a risk assessment situation. Do I take what's guaranteed right now, or do I risk some of that and hope that the move continues down? Personally, for me, I take my profits. Okay, there's the first candle that closed outside of our trend line. Should be out of your trade. You should be out of your puts right now. I don't care what happens next. I don't care what you wanted to happen next. I don't care what you think is going to happen next. Follow your rule. All right. Now these big wicked candles suck because that tells me that there's equal amounts of selling and equal amounts of buying pressure. We're trading sideways, chopping around. I mean, they're big wicks, but we're not really going anywhere. So at this point, I'm out. And now in our Discord, I heard people asking the question, should I get into the call? Should I buy puts? What should I do? This, that, and the other thing. The problem is you're being impatient. You're not waiting for the next move to present itself. We don't know what that move's going to be. Okay, we are slightly trending up, but then when we get up there, we start to get these weird red candles. Whoop, higher highs. Okay, again, higher lows, but the problem is, look at the wicks. There's too much battling going on right here. All right, all these candles, they don't tell me anything that I'm interested in playing. Okay, still, I mean, Chop City. Now here could have been a possible fake out or a possible willingness to get into calls. I'm sure that this faked some people out. In fact, I think I even bought a call here. Because of it breaking this high, I thought maybe that we were going to continue back up. When in reality, the safe play would have been to wait until we at least broke this or this. So where would I play the safest breakout? Would be here. And again, why? Because that's where we tried to move higher. We rejected and came back down, which, you know, and then we ran up from there. So I'm looking now to get into calls no sooner than this. And even here is relatively risky, but it's at least a level that makes sense. So what happens? And again, my profit target would be up there. Okay. So we're going to move. And I did. I did get caught here. I think I lost a couple $100 on a trade right here. I didn't wait for my own indication to go. But again, I do play more risky than some people will. The right move is to wait for a break of that high right there. So I'm going to fast forward here. Was there money to be made in some small puts? Yes. Was there anything that told me for sure we were going to, have a good reason to get into puts? Not really. All right. This chop right here, theta was destroying people. This was nasty. All right. Now, we have this weird run up. Okay. Not that it's weird, but hey, I think at this point, Joe Biden was due to talk in about 30 minutes from this point. Depending on how you feel or how you think, or whether you trade around news events or not, this could very well have been a reason for them to pump it up just so there was room to come back down, depending on something stupid he may or may not say. Who knows what the reason was, but long and short of it is, we closed above my target line. Get into calls, okay? Because we broke. Now, my selling point would be here, which happens to be the previous high, almost the high of day, where we rejected the last time. So, get in. Get close to being stopped out. Again, I wait for candle closes below my line or at my line. Chopping around. I was a little nervous at one point, but let's see. Yep, we get real close to that stop. That's a level that was holding good support. And there we go. So I did get out at my target here. Okay. However, Did I leave money on the table? The answer is obviously yes, considering the move is continuing up. But again, not my concern. By this point of the day, that was my last trade. If you were still in calls, that candle right there should have been enough to tell you to close the position. And the reason I say that is because you look at how strong of a move this was, and then look at how small and tight it starts to get near the top. You start to get the bigger wicks at the top. The candles are getting smaller. We're tightening up. And then, of course, we have the move down. I am not going to continue to play out the rest of this day, but it got loopy. And, you know, there was money to be made all over the place. But the point of this video was to show you what I'm looking at and what I'm trying to see that makes sense to me so I feel better about my trades. Now, I'm going to go ahead and let the rest of this chart show up. Okay. And I'm also going to turn off these indicators. And I'm going to show you guys another indicator that I never really used to use. In fact, I used to poke fun at somebody who did use them, although they were using a different version of them. I didn't really give them any thought until recently. I'm using Fibonacci-based pivot points, and they seem to act pretty interestingly solid at times. So I don't really draw all the lines that I just showed you guys because I can visually see them with my eye on the screen. It's important to know that these levels are based on the previous trading session's information. Okay. They're oddly handy. They don't act as solid support and resistance often, or they do sometimes. I mean, but they act as magnets for sure. I am finding myself using these as decent targets for entries and exits, not to the line itself, but to the direction. As you can see, this S2 for the pivot acted as a pretty good resistance for the majority of the day. That happened to be very close to where we opened, but as you can see, we reversed almost every time we hit it until we broke out. And then even then, it wanted to bounce around it. And then we came back below and headed right back down to the next one in line, which is S3. And again, they do act as supports and resistances at times, but if they don't, many times they act as a magnet for where the price wants to hang out at. The way the rule is written is that when you have the main pivot here, anything that is below that is considered to be a weak market, and anything above that is considered to be a strong market. So in theory, you could use that to give yourself a little bit more of an advantage as to gaining an overall direction or strength of the market itself. This is not a video about pivot points, but this is the only indicator that I keep on my chart because I am trying to find a useful way to trade with it. And in doing so, I am finding that they are relatively accurate for when you should be looking to take profits or getting out of positions, or what direction or where something may happen as far as a reversal or any of that stuff to take place. There's videos out there that explain these things in a lot more detail, but I can tell you that in times past, they act pretty good for reasons. I mean, just the previous day, again, you know, we bounced off of it. We broke through it. We headed down to this one. Again, we started to head down to the next one, acted as resistance. We headed back up to the previous one. I mean, it's just an area where if you happen to be in down here, I would probably be looking to take profits as we move towards that line. Same thing from this one to the next one. Take profits when you get towards it, in the vicinity, not when you hit it. You know, it won't always work out to be like that. But long and short of it is, this is the only indicator I use, coupled with just being able to read the basics of a chart and understanding why reversals happen, why support happens, this, that, and the other thing. You have to keep your eye on the big picture. The overall trend of the day is usually king. You don't want to fight the trend of the day. If you're going to take shorter trades, then yes, you can start looking in between the overall trend for positions. But for a lot of people who are holding trades for longer, you want to trade with the trend. And when you're wanting to get into a put on a downtrending day, you want to get into that put when you get up to the top of what your trend line would be, not in the middle of it, not at the bottom of it. Okay? Be patient. Or get into a call when you're bouncing off the bottom of the trend. Either way, you have to be paying attention to what you do. If you're not getting into a position because it's based on some sort of technicality, then you're randomly buying stuff and it's not going to work out for you. You won't have any confidence. And more importantly, you won't be able to recreate it when you need to do this trading again tomorrow. So learn to be a robot, take better positions, be patient, smaller positions while you're learning, and it will pay off. It works. We have people in the Discord that are doing it every single day. That being said, anybody who found anything useful in this video, please like, subscribe to the channel. I will leave a link to our Discord in the description below. And I will also leave a link to our Patreon for anybody who may want to support me or support the community. Thank you all for watching, and I will talk to you later. See ya!